Welcome to this in-depth exploration of wealth-building strategies that go beyond the surface. In today's volatile economic landscape, characterized by persistent inflation, fluctuating currencies, and rapid technological advancements, traditional methods of wealth accumulation are no longer sufficient. To truly build and preserve wealth, it's essential to invest in diversified asset pillars that provide stability and growth. Over the next couple of minutes, we'll delve into these pillars, backed by current economic data and practical insights. Let's begin with stocks, equities that represent ownership in companies. Despite market fluctuations, the S&P 500 has shown resilience, with a 25% increase over the past year. This growth is driven by sectors like technology and renewable energy, which continue to outperform expectations. Pause for effect. Investing in stocks means owning a piece of a business. It's not just about capital appreciation. It's about participating in the success of companies that drive economic progress. Financially literate investors understand that time in the market often yields better returns than trying to time the market. Pause. Consider this. The average annual return of the S&P 500 over the last 90 years is approximately 9.8%. This long-term growth underscores the importance of patience and strategic investment in equities. Next, we explore index funds and exchange-traded funds, ETFs, investment vehicles that offer diversification by holding a basket of stocks. These funds have gained popularity due to their low fees and broad market exposure. Pause. Platforms like Vanguard and BlackRock have seen significant inflows into their index funds, reflecting investor confidence in passive investment strategies. For instance, Vanguard's total stock market ETF has consistently outperformed many actively managed funds over the long term. Pause. Financially literate investors leverage these tools to build diversified portfolios that align with their risk tolerance and investment goals, automating their investments to minimize emotional decision-making. Bonds are often considered the stabilizers in an investment portfolio. With U.S. Treasury yields surpassing 5%, the highest in over 15 years, bonds are regaining their appeal as a reliable income source. Pause. Bonds provide fixed interest payments and return of principal upon maturity, offering a predictable income stream. They play a crucial role in balancing the volatility of stocks, especially during market downturns. Pause. Financially literate investors use bonds to preserve capital and generate steady income, understanding that a well-structured bond portfolio can weather economic uncertainties. Real estate remains a cornerstone of wealth building. Despite rising interest rates, property values continue to appreciate, driven by factors like limited housing supply and increasing demand. Investing in real estate provides multiple avenues for wealth accumulation: rental income, property appreciation, and tax advantages. Markets in suburban and emerging areas are particularly attractive for long-term investments. Financially literate investors approach real estate with a long-term perspective, focusing on cash flow and property value appreciation, while managing leverage prudently. Intellectual property, or IP, is an often overlooked asset class. In the digital age, creators are monetizing their ideas through books, courses, patents, and software, generating passive income streams. The global creator economy was valued at over $189 billion in 2024 and is projected to reach $480 billion by 2027, highlighting the immense potential of IP as a wealth-building tool. Financially literate investors recognize the value of their intellectual assets, protecting and monetizing them to create sustainable income streams. Dividend-paying stocks offer a dual benefit: potential for capital appreciation and regular income through dividend payouts. Companies with a history of increasing dividends, known as dividend aristocrats, have outperformed a broader market. Reinvesting dividends can significantly enhance the compounding effect, accelerating wealth accumulation over time. Financially literate investors use dividend stocks to generate passive income, reinvesting earnings to fuel further growth. Precious metals like gold and silver have been traditional hedges against inflation and economic instability. With central banks increasing their gold reserves, the asset class is regaining prominence. While not yielding income, precious metals preserve purchasing power and provide a safe haven during times of economic uncertainty. Financially literate investors allocate a portion of their portfolio to precious metals, balancing risk and safeguarding wealth. Cryptocurrencies represent a new frontier in digital assets. Bitcoin, for example, has seen significant appreciation, attracting institutional investors and mainstream adoption. However, the volatility of cryptocurrencies requires cautious investment. A diversified approach, allocating a small percentage of the portfolio to digital assets, can mitigate risk. Financially literate investors approach cryptocurrencies with a clear strategy, understanding the high-risk, high-reward nature of these assets. Investing in private equity and startups offers the potential for substantial returns. Platforms like AngelList have democratized access to early-stage investments, allowing individuals to participate in funding innovative companies. While the risks are higher, the rewards can be significant for those who conduct thorough due diligence and invest in promising ventures. Financially literate investors diversify their portfolios by including private equity, balancing the potential for high returns with the associated risks. Owning a business is one of the most direct paths to wealth. It provides control over income, scalability, and the opportunity to create value. Despite the rise of automation and AI, human ingenuity and entrepreneurial spirit remain irreplaceable. Small businesses continue to drive economic growth and innovation. Financially literate investors recognize the value of entrepreneurship, leveraging business ownership to build and sustain wealth. In conclusion, building wealth in today's complex economic environment requires a strategic approach, investing in diversified asset pillars that provide stability, growth, and income. By understanding and leveraging these assets, individuals can navigate economic uncertainties and build a foundation for long-term financial success. Remember, wealth building is a journey, not a destination. Start by assessing your current financial situation, setting clear goals, and gradually incorporating these asset pillars into your investment strategy. Thank you for joining us in this exploration of wealth building strategies. May your financial journey be prosperous and informed.